Welcome to the Torch Academy. Today we're comparing three tiers of business valuation and when to use each one. There are three tiers, each suited to a different goal. The first is online calculators and tools, free to $50. You answer questions, the tool gives you a range based on multiples. Consider stepping up to Tier 2 when you want an opinion grounded in your specific business. Tier 2 is a professional market analysis. A valuation specialist provides a written analysis, typically $200 to $500. It is based on their experience, comparable sales data, and professional judgment. Consider stepping up to Tier 3 when you need a formal document that holds up in legal or regulatory settings. Tier 3 is a certified appraisal from a credentialed business appraiser. It is a formal, documented valuation that can be used in legal proceedings, financing, or disputes. It costs $5,000 to $15,000. The right tier depends on what you are trying to accomplish. Online tools are designed for fast, repeatable valuation. You plug in your revenue and earnings, maybe some growth assumptions, and the tool returns a value range based on real market multiples. What businesses like yours actually sell for. It is grounded data, just not yet adjusted for the specifics of your business, your customer concentration, your owner dependency, your competitive position. For a lot of owners, that is exactly what they need, a credible starting point, on demand. Consider adding a professional market analysis on top when you want a written opinion tailored to your business or when you are preparing for negotiations or formal documentation. A professional market analysis layers expert judgment on top of the same kind of market data online tools use. Your financials, comparable sales, market conditions. A valuation specialist uses real market data, does comparable sales analysis, runs income approach calculations, and provides a reasoned valuation opinion. It is usually 5 to 20 pages, not as detailed as a formal appraisal, but solid and professional. Cost, typically $200 to $500 from a valuation specialist or online service. This is sufficient for most business owners. It is reasonable, it is based on actual data, and it can be used for financing purposes. Banks often accept market analysis as sufficient documentation for business acquisition loans. A certified business appraisal is the most comprehensive option. An appraiser with credentials, ABV, CFA, or CVA, performs a detailed analysis using all three approaches: market, income, and asset. The report is 30 to 50 pages of analysis, assumptions, and supporting schedules. It is formal, thorough, and legally defensible. Cost is $5,000 to $15,000. Consider this tier when you are in a legal dispute, fighting an SBA decision, dealing with divorce or partnership dissolution, or anywhere you need a valuation that is built to hold up in court. Here is the quick comparison. Online tools are the fastest and lowest cost, giving you a market-grounded range in minutes. Market analyses are inexpensive and professional, with a written opinion based on your actual financials. Certified appraisals are the most thorough and formal, built for legal defensibility. The right choice depends on what you are trying to accomplish. Consider stepping up to a market analysis when you are preparing to go to market or need a written opinion for a lender. Consider a certified appraisal when you are dealing with a legal dispute, an SBA appeal, a divorce, or anywhere formal documentation matters. Here is what a market analysis typically includes. An executive summary at the top states the valuation range up front. Business description covers what you do. Financial analysis walks through your revenues and earnings. Market analysis shows what comparable businesses sold for. Income approach shows the earnings-based calculation. And then a conclusion based on professional market judgment. The output is usually something like, business value range is $850,000 to $1,050,000. Most probable selling price is $925,000. That is useful. That is defensible. That is sufficient for most situations. If your buyer is financing with an SBA loan, there are valuation implications. The SBA requires valuation documentation, but a market analysis is typically acceptable. Some lenders are stricter and want a certified appraisal. And here is the thing: the SBA has lending limits based on valuation. If your valuation is too high, the lender will not approve a loan high enough for the purchase price. That kills the deal. Also, the lender will get their own valuation done anyway. If your valuation is significantly higher than theirs, negotiations get tough. Strategy: work with your valuation specialist early to settle on a valuation that is accurate and defensible. Do not try to inflate it. It will catch up with you. If any of these apply to you, get a certified appraisal. Divorce: if your business is part of a marital asset being divided, you need a formal appraisal. SBA dispute: if the SBA says your valuation is too high or too low, a certified appraiser can help you appeal. Litigation: if you and a buyer are fighting over price after signing a purchase agreement, you need a defensible appraisal. Multi-owner disputes: if you have partners who cannot agree on valuation, a third-party appraiser settles it. Estate planning: if the IRS might scrutinize your business valuation, you need documentation. Divorce: it warrants two mentions because it is the most common legal dispute involving business valuation. In all these cases, spending $5,000, $15,000 on a certified appraisal is cheap insurance. Here is a trap I see constantly. An owner gets a market analysis saying their business is worth $900,000. That seems low to them, so they list it at $1,300,000, hoping someone will bite. Instead, serious buyers see the disconnect and think the owner is unrealistic. List at your valuation. If you want a higher price, improve the business first. Build those value drivers we talked about, then get a new valuation. That is how it actually works. The key insight is to match the tier to what you are trying to accomplish. Use an online tool anytime you want a fast, market-grounded valuation, whether for self-assessment, internal planning, or just to see where your business stands. Consider a professional market analysis when you are listing your business, working with a lender, or want a written opinion grounded in your actual financials. Consider a certified appraisal when you are in a legal proceeding, navigating tax planning, or anywhere you need formal, defensible documentation. Use the right tool for the job at hand. Thanks for watching. If you found this helpful, head over to torchapp.io/signup to create your free account. Torch uses AI to help you navigate buying or selling a small business, whether you're just exploring or ready to make a move. And don't forget to subscribe for more episodes from the Torch Academy.